Good morning, traders. Welcome to your 7-minute market update. Utilizing technical analysis to predict direction based on human emotion. Today is June 30th, 2013. Quite a few bit of things to talk about today, so let's get started. Okay, so in the previous video, we talked about the 157 and the 154.10 levels being good support. What it came down to was the 157 being the good support that I was talking about. In fact, if you look up here where it says the low, L for low, the close, C for close. If you look at this candle, which is Monday's candle, it closed at 157.06. That's about 6 cents off from this calculated level. I don't know how much closer you can get from this. Did I take the long trade from this level? Unfortunately, I didn't. I was actually waiting for it to hit the 154.10 level. It didn't get close to that, but I think we could have a good chance of it coming down there on the next run down if we even get there. So with that said, the 157 level actually held, and it held pretty well. Had I taken a long trade, I'd be pretty happy, but I didn't. But what I did do was, if you look at this trend line coming down here, which did not change from the previous videos, and then this bottom trend line here, which also did not change, and then let's delete all the lines here. You see these two moving averages, how they crossed over just like that, how price just went right into these two moving averages here. That means we're gonna get a pullback. I would say the odds are in our favor that we would get a pullback. So I initiated another short because that to me just looked like the almost perfect pattern to do such a thing, and so I did. Right now we had a minus 66 on Friday, and to be honest, well, Thursday and Friday, as soon as we hit this bottom trend line, I initiated a short, and then now I'm back sitting pretty in money again with a break-even stop. So could this market move higher? That is the question that everybody has. Okay, so just like we talked about in the previous video, let me just delete all the drawings once again. We have a high. This was the high. We have a lower high. Okay, we have a low, and then we have another lower low. This means, and like I said in the previous video, that the trend has changed on the daily chart. So far in the weekly chart, it's still an uptrend, but on the daily chart, it is now confirmed that the trend has changed. Can the trend change back to the higher side? Back to a bullish trend? Yes, definitely can. And the reason is the weekly is still in a bullish trend. However, the daily is a good indication that the weekly could soon enough turn as well. Okay, so this was a obvious no-brainer short over here. So the question is, can we go higher? Next week we have 4th of July. The markets are closed, which means this is going to be a short week. A lot of traders are taking vacation, yada yada yada. This means that the volume should be a little bit lower and not as volatile as it was this past week and the week before. And the reason is everybody's on vacation, nobody's going to be trading, there's going to be a lot of black box trading, that's about it. So volume shouldn't be as high. I wouldn't expect volume to be this high here. But if it does get high, such as this candle here, then that would indicate a nice reversal after 3 candles down, of course. So if we come back into the 158.62 and we start reversing higher, then we might want to be prepared for that. Again, we have to, just because the trend has changed and it is confirmed on a technical level that the trend has changed to the downside, to the bearish trend on the daily chart, that doesn't mean that federal manipulation cannot take place. This is just technical analysis. All we are doing is reading human emotion. That's what technical analysis is reading what the general trading population is about to do or going to do or thinking of doing, or so on and so forth. Now, with that said, federal manipulation is changing that emotion of how traders think. So you just have to think about that. Just be prepared for anything that may or may not happen that way. But one thing to keep your eye on is this. We have a gap fill right here. Okay? We closed here. we opened here. This is a gap fill, so there is a possibility due to the low volume that we could pull back short, a small pullback, and then head higher here. So for example, if we pull back 1, 2, 3, 4, so 4 more candles down. So if we pull back all the way through Wednesday and we reverse, we don't make a lower low, okay? Say we come all the way down here, just as worst case scenario, and then we bounce. Our next resistance point will be here at this gap fill. What we want to watch out for is a close above this pivot point here. We close above this pivot point here, then there's a good possibility that we are going to start creating a triangle, an inverted triangle, or such that the trend change is short. The Fed stepped in, and then we will continue higher. Again, the weekly chart shows that we are not confirmed down. The trend on the weekly has not confirmed yet, so we just have to keep our eye on the daily and see if it continues to the downside. Alright, with that said, what am I going to be more bullish or bearish? Again, I am neutral. I make my money going up and down. So when I say bullish or bearish, I do mean in the short term. And I do say that, or I do see the fact remains on a technical level, this is pretty good resistance. So if we do head down, the 154.10 level will be the next level before I initiate another short. Okay, I'm sorry, another long not another, but a long position. Now would that be out of the question? Not necessarily. I could draw a trend line just like that if I wanted to, and it would end up right around the 154.10 level. Ultimately the 149.51 level is a possibility as well, so we just want to keep our eye on that. I just want to make sure that I come up with new calculations. If the right pattern plays out, then I can get enough technical data to come up and put into my mathematical formula to come up with more support and resistance lines. I'll probably be able to do that towards the middle of next week, and then I'll post that on the Facebook page that I have, just to give you guys more support and resistance lines. But we talked about this 157 support level over here in the previous videos, and that was created, believe it or not, last year, September 13th. Okay, last year September 13th, the 157 level was a substantial level, and that's why I left it there. Okay, so with that said, let's take a look at the weekly chart. Alright, this is what I was talking about in the weekly chart. We haven't had a solid pivot point on the weekly chart till down here. Alright, some may consider this a pivot point. It is definitely a pivot point on the daily chart. Over here, this is a consolidation period here, right? We kind of based over here, and then we broke out on this candle here, right? So we started consolidating, we based, and then we broke out and we headed higher. So the hard part is there's no real pivot point here. Again, my definition of a pivot point is at least 3 candles down before a pivot can be established or considered to be a pivot, and that would be at a very minimum. So you start with this top candle here, 1, 2, 3. This is a pivot point had it turned on that candle there, but it continued down. And if we do bounce higher, then this would be considered a pivot here. This candle here would be a pivot. But as of now, I don't see a pivot anywhere here until down here, right? We have a high, we have at least 1, 2, 3 candles all the way down here. Over here is a pivot. So until we close down here, it's not a lower low in my book. But again, on a technical basis, all you would really need to do is close below this consolidation period here, or possibly even this candle down here. Okay, let me delete auto drawing so it's easier to see. And it closed below this consolidation period where we based and broke out, and it closed below this candle here, and these are daily pivots, by the way. And it closed below this so-called pivot, and it closed below here. We close below here, then it's a lower low. Okay, and that's when I'm thinking that we will continue down on the in a very bearish mode, or in a very bearish situation. And I do believe that I don't think the Feds, when I say I think, it's not what the technicals are telling me, but I don't think the Feds will allow that to happen. Okay, the 154.89 level, if you notice, I think it was the 154.10. Let me just load the drawings here again. On the daily, I had that 154.10 right here. So how can I delete this and leave the 154.10? I'll just delete everything, create another price level here. I'm not going to save this one, but this is just as an example. 154.10 is right here, and it just so happens to be on the weekly chart. Okay, that's why these formulated support levels and resistance levels are so important. On the weekly chart, is going to hold substantially pretty well. Okay, so I would expect that if we can get to the 154.10 level, that we should get a bounce or somewhat of a bounce, and then either we head lower or higher. That remains to be seen. We'll just have to look at the pattern when that happens. If it does happen, we could actually potentially bounce now. And the reason I say that is this. Let me get my other. Okay, so on the weekly chart, we did talk about this in the previous videos as well. We went right into the 20 moving average, and I said, well, we could potentially get a bounce from here because on the weekly, and again, the higher time frames will trump the lower time frames. So on the weekly chart, which is the higher time frame of the daily, it shows that we should get a bounce because we haven't had a bounce. We had a bounce somewhat over here, and then now we could get potentially another bounce. We broke down from that 20 moving average, and then now at the end of this week, or last week I should say, we closed and recovered above the 20 moving average. That means that because we didn't close below, I mean, we didn't even break down from the 20 moving average. So had we closed below the 20 moving average this week, that would have looked pretty bearish. And then of course confirmation or validation would be a close below that candle for next week, but we didn't even get there. What happened was we recovered, and now we are back above the 20 moving average, which should, on the weekly chart, and again I'm just talking about technical analysis here, see a nice bounce. Okay, so we could bounce all the way up to that gap fill potentially. Let's see where that gap fill was. The gap fill was about 163.40. 163.40 would be right around here. So we could get a bounce into this gap fill area here on the daily, and then head lower. But as you can see, it's possible that we may actually head higher. Okay, so just keep that in mind, that I'm not totally 100% bullish or bearish. I'm currently short the market, as you guys all know, and I'm currently even more short after I initiated the short over here. So I was short up here, okay, and I'm still short, and I initiated another short here because that was just a no-brainer short, so I had to do it again. Normally I don't short twice, and to be honest, I was going to dump all my shares at the 157 level, but I decided to hold on to it, unfortunately, but I did. And I initiated another short here, so you know, it's not really a big deal in my opinion. I let my emotions get the best of me, and that's why I didn't sell half of or 3/4 of my 150 at the 157 level. I was greedy, and I held out for the 154, in which case I would have entered in on a long position. But you know, I'm human, and I have to try my hardest to keep the emotions out of my trades. Sometimes I let it get the best of me. Sometimes when I'm tired or you know I'm working too hard, it happens. But you know, it is what it is. As long as I'm not in the money, not losing money, and right now I am in the money with my 2 initiated shorts, then I'm sitting pretty. So tomorrow, if we start heading higher to this gap fill, I'll just get stopped out, break even of this trade here. If we close above here, I stop out in the money from my position here. Okay, so it's really that easy. No matter what, I'm making money, so it doesn't matter to me. And these are swing trades, not day trades. My day trades are a little bit more, I should say, a lot more cautious. So immediately after a certain price, I don't even look at levels. I'm already taking some money off the table, and then I let the support and resistance line dictate the rest of my investment. In any case, that's it for the SPY. So just a quick recap on the weekly chart, we are bullish. On the daily chart, we are bearish. And this is short term. Okay, weekly is a little bit more long term, but this is in the short term. I am not an investor. An investor will buy and hold for years, and they don't care what it does, goes up and down. It really doesn't matter. But the expectation is this: we get up to the gap fill. We should get some resistance there, at least in the intraday. Okay. If we get up to the 165.80 level, That's one. That's the one. This is the key level here. We close above this level here. That's going to get me a little bit more bullish than I am bearish. Okay. Now, this is not a pivot in my book until 2 more days. Okay. So Tuesday, we're still bearish, then this is going to be considered a pivot point, in which case will be another lower low. That'd be 3 lower lows. Okay, and then if we have another lower low, then the 154.10 level would not be out of the question, and that would be the third lower low. So technically, if I draw a line straight like this, it's possible we could even get down to the 200 moving average. Okay, the 200 moving average right now is at the 151.19.